Good morning, Bitcoiners. Hello, and welcome back to your economic calendar, the news and analysis you need to start the week off right in Bitcoin. I'm Mauricio Di Bartolomeo, co-founder and chief strategy officer here at Ledn, and today is Tuesday, July 5th. We have a very special episode for you this week, as today we're announcing that our most recent proof of reserves attestation has been completed and will be available to our clients before the end of the month. More details in today's show. We are also going to be talking about Argentina, who is experiencing hyperinflation at the moment, and we're going to see how they are now running into stablecoins to find some refuge and Bitcoin as well. And last but certainly not least, we're also going to be looking at Bitcoin price action, price bottoms in previous Bitcoin cycles, and volume patterns during those times of reversal to see if we can find any clues given the current price action that we're seeing in the most recent weeks. And so it's going to be a great one. Grab your coffees. All right, and before we get started with our analysis, today we wanted to share a very special announcement, as I mentioned in the start, and let our clients know that our next proof of reserves attestation has been completed and will be available to all of our clients before the end of the month. Now, as you know, as you can see on your screen, this is our proof of reserves page on our website. And as you know, Ledn was the first ever digital asset lender to introduce a proof of reserves standard that we complete every 6 months with Armanino, a certified public accountant in the United States. This proof of reserves attestation exercise consists of Armanino reviewing all of Ledn's client balances, as well as all of Ledn's assets in our custodians, bank accounts, lending relationships, and trading partners. And the exercise ensures that Ledn has properly accounted for all of its assets to match or exceed its liabilities. You can learn more at our website that you have right here, ledn.io/proof of reserve, and you can learn more about the process itself and how you can check and verify with your own unique hash ID that is provided to you on the Ledn dashboard. You can verify on the accountant's website that your balance was accurately accounted for during this attestation. And as new attestations come up, they will continue to be displayed on the bottom part of your dashboard. Again, more details on how you can find this and review your own balance at our website, ledn.io/proof of reserve. And so now we can move on to our analysis. And before the end of this month, all of you who are our clients will be able to get your hashed ID from the dashboard in your Ledn platform or your Ledn account and go to the Armanino website and ensure that your balances were accounted for in this most recent attestation. So that's something that makes us very proud. And we encourage everybody to check your balances once this hash ID is given to you on your dashboard. And now onwards to our analysis. So starting as we usually do with Bitcoin, we can see here that so far in the trading session this week, it had some gains, but essentially has given most of them back at the moment, currently trading at $19,440. And considering it was a long weekend, both in the United States and in Canada, with Canada Day last week and 4th of July this week in the United States, and layering on top of that, the fact that we've had a very uncertain macroeconomic environment, Bitcoin prices held up quite well over the holiday period, as we can see, given that there was a very thinly traded liquidity over the period. Now, this could be a sign that forced liquidations, the types that we had been seeing in previous weeks, could be finally coming to an end. And this is basically bringing the market into a more balanced position. To highlight some of the price action that we saw in the previous weeks, we wanted to share a chart that was courtesy of Alex Kruger via Twitter last week. And this is the chart that we're referring to right now. And as you can see from the chart, during capitulation moves, which capitulation move just basically means the final move down in a particular cycle. Traded volume for Bitcoin usually reaches a high point as price bottoms out. As you can see from the chart, this pattern was basically evident in the bottom that we saw in 2018, right around here. It's hard to highlight it here, but I'll bring it back to the interactive chart in a second. Let's put this back in the interactive chart here and just add the Bitcoin aggregate volume here. So as you can see here from the interactive chart, we can see that in the previous capitulation candles for Bitcoin, again dating back to this is the one from 2020. We see the one here from 2018. Again, this is basically the high point of the volumes was reached right at the bottom. Again, we saw that happening here in March 2020 with a high peak at the bottom of the market. We saw that again here in June, essentially after it capitulated and the price didn't really go much lower after that candle before staging a comeback. And most recently, we saw that in the week of June 13th, the aggregated traded volume for Bitcoin reached a historical record high. And if what we have seen in the past holds true, this means that we could be at the early innings of Bitcoin prices finding some footing and potentially turning a corner. And so we just wanted to highlight this as the aggregate volume paints a different picture than the particular exchange volume. And it becomes very clear when you see it in aggregate like this. Now, looking at broader markets, it appears that bond investors are finally starting to price in some interest rate cuts by the US Federal Reserve. And this is supposed to happen as early as the first quarter of 2023, according to basically the prices that we are seeing and the structures that we are seeing in the bar markets. And this is referenced in this article by Bloomberg that you see on your screen right now. Now, why is this important? As we know, after the pandemic, the Federal Reserve moved quite fast to ease monetary policy by lowering interest rates and providing cash stimulus to citizens. This sent asset prices and markets in general, equity markets, much higher. So again, lowering interest rates and increasing spending into the public made asset prices and markets soar. Now, the Fed is currently embarking on the exact opposite. It is essentially raising interest rates and cutting costs. And what this is having is the exact opposite effect on asset prices and markets. Now, the Fed, the fact that, now why does this matter? It matters because the fact that the market is finally pricing in rate cuts means that it senses that the Fed might have to let interest rates cool off as the US economy potentially could enter into a recession. And the markets are seeing this happening in the first quarter of 2023. So not too long from now. Now, the chart that I'm about to show you shows just how correlated Bitcoin prices have been to the increase in the US money supply. And this is the chart that we wanted to highlight. Now, again, as you can see, the yellow or gold line are prices of Bitcoin, and the blue line is the growth of the monetary supply, global monetary supply year over year. And as you can see, there is some pretty interesting overlap between the two, meaning that Bitcoin prices are very much affected by monetary policy and economic conditions that are set by central banks across the world. So this is why ourselves and many others look so closely at the moves by central banks in order to try to anticipate where Bitcoin markets and others could be heading towards. Now, another thing that we wanted to share was that in the most recent In the Know update by ARK Invest, Kathy Wood from ARK Invest shared similar thoughts on the state of the market, of the Bitcoin market particularly. And she mentioned that most of the contagion risk could be over in terms of systemic risk around platforms. She also mentioned Ledn, referring to us as a highly regarded platform out of Canada with deep expertise in our industry. So thank you very much for the kind words, Kathy. And now moving on to looking at Bitcoin derivatives in the Bitcoin derivatives market, it appears that Bitcoin futures are pricing in a good amount of volatility and uncertainty in the months to come. This is the chart right now for the annualized basis on the Bitcoin futures. Again, as we've mentioned here many times, typically these curves are sloping upwards and to the right. And right now we're seeing that they continue to show pretty irregular shapes. Most, if not all, are essentially flat to downward sloping, which means, or is called backwardation. And this just reflects that the markets, the futures markets, are pricing in a pretty steady price of Bitcoin between now and the end of the year, or even potentially a bit lower into the future than where we are today, which makes the curves slant downwards. So again, this just highlights how much uncertainty and volatility these markets are pricing in for the upcoming months in terms of price action for Bitcoin. And as always, we wrap up with what's ahead for the week. In today's What's Ahead section, we wanted to highlight what is currently happening in Argentina. And for that, we're going to show some articles or some websites for you in this section. As you can see in the headline below from New York Times, last week, Argentina's economy minister quit abruptly, which then again exposed rifts or fractures within the ruling party in the Argentinian government at the moment. This occurred as Argentinians are currently protesting over fuel prices, and they are experiencing soaring inflation. The chart that we are about to show you is not a joke. According to official data from the Argentinian Central Bank, the Argentinian peso has been losing value every single week for over a year. And this is the chart that we're going to show you. Back from July until this July. So again, as you can see, this line here, I wish it was a joke. It is not. It is the Argentinian dollar the Argentinian peso compared to the US dollar. And as you can see, it is green for miles, and it is does not look at all like a asset that trades freely. During this time, this is as per official data from the Argentinian Central Bank, the peso has lost 30% of its value relative to the dollar. And as you can see, the losses are only accelerating. To show you this, we're just going to draw a line from the beginning of the year until now. And you can see that it's basically lost over 30% of the value, with the losses actually accelerating as of recently rather than decreasing. Now, this is all as per official data, and we'll get into that nuance in a second. This week, CoinDesk reported that local exchanges in Argentina have seen stablecoin volumes soar after the announcement of the Ministry of Economy. Now, however, and it's very clear why they are doing this. They're doing this to find refuge in stablecoins. Now, as bad as the data provided by the Argentinian Central Bank is, the reality for people on the ground in Argentina is much, much worse. Exchange rates are a vanity metric for governments. We've covered this at length in this publication. As you can see, the exchange rate between the Argentinian peso and the US dollar looks anything but free floating. And this is, again, the chart that we just showed you right here. This does not look free floating at all. Exchange rates, official exchange rates set by the central bank, are designed or architected by the central bank or banks to craft an image of the state of that local economy to the outside world. To illustrate this, we're going to take a look at what is called the informal exchange rate in Argentina. By all accounts, this is the real exchange rate for everyone on the ground, and therefore this exchange rate is the one that dictates the real inflation that people experience on a day-to-day basis. So let's take a look at this informal chart. This is the same time period. This informal chart runs from July last year until this July. As you can see, the informal rate for the Argentinian peso at the start of the year was 171 pesos, and currently the informal exchange rate is at 267 pesos per dollar. Contrast that to what the central bank says the exchange rate is. It says it's 126 pesos per dollar. There is more than a 2 times delta between what the central bank says a dollar is worth and what you can get a dollar for on the street. Now, as you can see, again, from this chart, the informal rate has gone to basically from 171 or roughly 180 pesos per dollar in July to the current 267 pesos today. That's equivalent to 48% annualized inflation as opposed to 30% as reported by the central bank. Now, in June alone, if we look at the inflation that Argentinians experienced in June alone, inflation was 16% as per the informal rate in the month of June alone. This is an equivalent of an annualized inflation rate of 192%. Argentina is experiencing extreme inflation, and it's no surprise that Argentinians are looking for refuge in stablecoins, US dollars, and Bitcoin. From my experience in Venezuela, it would not be surprising to see increasing restrictions on foreign exchange transactions through local banking and fintech platforms, including potentially local crypto platforms. In terms of economic data this week, moving away from Argentina and now talking about what we can expect in the week ahead in terms of economic data out of the US. This Wednesday at 2 p.m. Eastern, we got the FOMC, the Federal Reserve Open Market Committee, meeting minutes from the meeting held last week. And this will be interesting because it could reveal additional details to what was discussed or published by Jerome Powell after the press conference when their meeting was finished. And this could potentially move the markets as well. And lastly, this coming Thursday at 1 p.m. Eastern, we get Fed Speaker James Bullard giving a speech. He's the St. Louis Fed president, and he's also the most hawkish member of the Federal Reserve. So the markets will definitely be tuning in to what he has to say. And then at 1 p.m. on Eastern on Thursday, we also have another Fed Speaker, Christopher Waller. And again, 1 p.m. Thursday and 2 p.m. Wednesday, those are times that could potentially move the markets based on what is said. And we just also wanted to remind our clients that our proof of reserve, our most recent proof of reserves attestation dated at June 30th has been completed and will be available for you to check out and review on your Ledn dashboard and take that hashed ID to put it into the Armanino Explorer, our accountant, so you can verify that your balances were included in the attestation, and you'll be able to do this before the end of this month. So with that, we've reached the end of today's show. If you don't yet have a Ledn account, I welcome you to check out ledn.io and learn how you can start earning the best interest rates for your Bitcoin and USDC. We also have the best rates for dollar loans backed by Bitcoin if you need liquidity and don't want to sell your stack. And our most recent product, the Bitcoin Mortgage, allows you to buy a house as big as your stack. Thank you, everybody. Have a wonderful week and see you next time.